This is Sam Putnam.
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 Trump's drone stocks are about to 10x, and this is how to profit now. I'll give you a hint. Buy this stock, UMAC. This is an idea. It's not financial advice. Trump Jr. is an investor in this stock. So this is literally Trump's drone stock. Let's take a look at the chart and then into Trump Jr.'s involvement. Here we go. This is what we're looking at here. $12 is a pretty important whole dollar number level, and then 13 up here. To make it super simple, if you buy at 11, risk 10, and look for a move up to 20, that's a significant reward to risk opportunity. This is when Donald Trump Jr. bought the stock on November 27th, and this thing went wild. Did it come back down? Yes. Are you going to hold it for months? No. This is a penny stock. It's $10, but it's still a penny stock. Let's look into what exactly this company does and how the Trump connection factors in. They do drones, right? And they do have this recent million plus order. Okay. They did acquire a developer of electric motors and propulsion systems for unmanned aerial systems, UAVs. And they also entered into a definitive agreement to purchase $4 million worth of stock in a optics and imaging systems company. So you need good imaging for drones. You need good propulsion for drones. They're making sensible moves, and they have been working on getting this $10 million phase 2 contract. Phase 2 is what it sounds like. It's not preliminary, but it's also not, the $100 million Department of Defense contract that we might hold the stock waiting for news like that to come out. Now, these are the stocks that you want to watch at the same time. RCAT is the main one, and Ondas Holdings is another one. Okay, ONDS. These are possibly going to move in sympathy or sort of signal how this sector is doing. RCAT's holding up very well. ONDS has gone crazy. So I have to think that UMAC is the play, okay? These earnings were just okay. It is a loss, but they're also a growing startup, so it's fine. They do have revenues projected to climb 2.5%, not percent, 2.5 times next year. So we'll see what the revenues actually are, but they think they're going to get defense contracts, and there might be some legislation coming out that makes drone companies in the U.S. more attractive investments. We'll see what happens if it's like the rare earth export restrictions that China has on the U.S., if there's some type of news event. This is the important aspect of Trump Jr.'s involvement. If he says that the need for drones is obvious, it's also obvious that we must stop buying Chinese drones and Chinese drone parts. Well, maybe it is realistic to think that these publicly traded drone companies could fly when there's some type of act. Think the Genius Act for crypto. This guy is on the board, and it's taken a while. He's on the board back in November of last year, so it's almost 9 months to a year now. But as far as the filings show, he still holds his 300,000 shares, which is a few $1 million position. He's not Trump, he's Trump Jr. again, so that might be somewhat meaningful for him. The real concern here is, well, do they have anything else going for them. And basically, is there going to be some type of Supreme Court ruling that basically says, hey, guys, you can't just take a 10% stake in Intel. You can't put your sons on all the boards of all these companies. But so far, that doesn't seem to be the case. So UMAC seems like the play. As I mentioned, he hasn't sold according to Edgar, the SEC filing website that's publicly available to everyone. And this revenue, it's only a couple million, but it did increase 50% year over year. Gross margin was solid. And this net loss did go to paying executives. So that's sort of what small companies do. Gotta give the big guys some money. But look, if you didn't pay the executives, you also wouldn't have these companies in the first place. But I'm not here to argue executive compensation. The net loss is less than $1 million, and they do have over $80 million of cash, and they recently raised a lot in the past few months. So that was the market reaction we see on the chart, where the stock went sideways here after earnings, which is actually relatively strong, considering a lot of Q2 earnings reactions were to the downside, even though the earnings were okay in many cases. That's just where the market is after we've rocketed up 40% from the April tariff reversal. Now, they're not cash flow positive, okay? Of course, they say they're going to be. But we're not even saying that we're going to see what happens. We're just going to hop in this stock, and this is not advice, actually, so you could do whatever you do. I'm just saying that I do believe that despite, expenses increasing significantly, and this dilution growing about a double, which can occur when you do have an acquisition. Everyone wants a piece of the pie. Executives from the other company you acquire could get a plan that sweetens the deal with some warrants. Here is the float right now. It's almost entirely publicly traded. The outstanding shares is only a couple million more than the float. But look, if the float's 28 million and there are 60,000 shares that could add into that float, that's not going to really depress the share price too much when those get sold in. But it is relevant that they have dilution at all, okay? And this definitely could depress the share price if they sell $300 million of stock to the public, considering their float's only 30 million, well, 28 million, and their stock price is $10. They would basically be doubling the float, right? 300 million divided by 10 is 30 million. Are they going to sell it all in one day? No. I'm just saying that this was a recent registered at the market offering dilution instrument, and they could also tap their shelf at any point and raise more money, a lot more money, almost $1 billion, and that they can raise by doing more offerings such as those they've already completed down here. And they've done a number of them over the past 6 months, totaling about 100 million, a little less than that, which again is like a third of their enterprise value. So look, do you want to buy this company? Super simple. This is the idea. Buy the stock, sell it if it goes down $1. If it goes up $5, $10, you probably want to sell it too. Okay? Now, for the more apt, you do want to trail with a moving average. Okay? Those are on Robinhood even. The indicators it comes default with are these moving averages. So the one you probably want to trail with is this red one I have here. Yours could be any color. It doesn't matter. It's 20-day moving average. So the 5-day moving average basically follows the stock, right? That's the pink one. The blue one's 10-day. That's a little slower. The red one's a little slower. That's 20. And you don't have to worry about the next one. That's the 50. That's the orange one. And then this one is the 200, which we actually do use to determine if it's overextended already. Right now, it's only about 30% up from the 200-day moving average, which gives an indication that there's a lot of meat on the bone compared to its peers that we were just looking at, which were what? RCAT was one of them, which looks fine. It's pretty close to the green line, right? And ONDS, that thing is not close to the green line. It's 200+% up. So you can see that visually. It never hurts to have a little numerical confirmation. And if you guys like these videos, if you haven't subscribed yet, hit that subscribe button. If you want to talk in detail, head over to stockscommunity.com. You can ask any questions in there. I'll be in there. $25 for 7 days. Give it a shot if you think it's worth it. I will see you in the next one. Remember to hit that subscribe button if you haven't done so already.
This is Sam Putnam.
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 This is Sam Putnam.